Hello, welcome back to the channel. It's nice to have you here again. Thank you for joining in. Okay, today, so let's just dive in straight. No need to beat around. All right, but first, I want to thank you if you're subscribed to this channel. Whether you just did that or you have done that a while ago. And also, I want to plead with you, if you haven't subscribed to the channel and you like what we do here, kindly hit the subscribe button so that you get notified whenever we upload any of our insightful videos that helps your investment decisions and business insight. All right, so today we will be looking at the Northern Nigerian flour mill. That may sound familiar. We have the famous flour mill, normal, and then we have the Northern Nigeria flour mill. So I happened to stumble upon this company when I was doing my research, and I really did want to know what their operations have looked like, what their profit margin look like, what's their revenue look like. So the revenue is actually, the profit margin is actually a function of the revenue and the profits, the net profits. So this is what the data looks like. So here we can see that we have the profit margin, which is a function of dividing the net profit by the net profit by the revenue. So okay, so I think the system is acting up now. All right, let's see. Okay, so just a little tweak. All right, for more clarity. Okay, so the function of the profit margin is a function of the net profit and the revenue. So we just divide, you can see the formula here, we just divide the net profit by the revenue, and then we get the profit margin. So what the profit margin is actually saying, what is communicating, this video is about what the profit margin communicates about the company. But then before I go into what it's saying, what the chart is saying, I would like to talk about the company at first, as is always my custom to discuss about the company, to give a brief about the company before we then move into what the chart is actually saying. So the Northern Nigeria flour mills, they have the acronym NNFM. Can't you see that anywhere? So they are a leading flour mill company located in Kano, Nigeria. That's in the northern part of Nigeria. And this company was established in 1971 as a joint venture between Nigerian government and a foreign partner. So they operate a modern flour mill with production capacity of 500 metric tons per day, and they produce a range of flour products including bread flour, pastry flour, and confectionery flour. So they have the bread flour, which is named Golden Crown. They have the pastry flour, which is Golden Crown pastry. They have the confectionery flour, which is the Golden Crown cake, and the all-purpose flour, which is the Golden Crown all-purpose. So these are the four major products that they have when it comes to flour. So they also have certifications. They have the quality management certification, the ISO 91-2015. They have the food safety managed system, and they have the hazard analysis and critical control points. So they are actually a very standard company when it comes to so they have relevant and required certifications for standard company. And also this NNFM has received several awards, including the best flour mill in Nigeria award at the 2019 Nigeria Manufacturing Excellence Award. They also engage in community development initiatives such as supporting local farmers and providing training programs. So this company are not just focused on getting from the community, but they also focus on giving back to the company, and those are the kind of company that any nation or any society wants to have. As we all know, different companies are facing different challenges right now, and NFM is not an exception. So they face challenges like fluctuating raw material prices and infrastructure constraints, and also competition from other flour mills. So as is the custom of every company too, they have future plans. So the future plans of this company is to expand their production capacity, diversify into product range, and explore export opportunities, because every company now wants to earn in dollars, and the only way to do that is to explore export opportunities. And Northern Nigerian Flour Mill has also spotted that opportunity, and they are willing to leverage on it. Okay, so let's go into what our data right here is saying. First of all, I'll just throw a little light on what the profit margin actually is. So the profit margin is just the difference between a company's revenue and their cost of goods sold. So but then it is expressed as a percentage of revenue. So it represents the amount of money a company retains as profit after accounting for the direct costs associated with producing and selling each product or service. So to do this, because here we are dealing with the net profit margin, so the net profit margin, we just divide the net profit by the revenue, and then we multiply it by 100. So the profit margin is actually a key indicator of a company's financial health, their pricing strategy, and their operational efficiency. And obviously, a higher profit margin generally indicates a more profitable business, while a lower margin may indicate room for improvement in pricing, cost control, or efficiency. So from a first glance, we would look when we look at this, we'll see that these profit margin values are actually very low, because in 2014 we see that we have 2.05%, and after that year they had 1.9%. So what this is saying is that, and we also observe that most of the revenue, most of the profit margin, is it most of them? No, not most of them. So we are actually analyzing for 10 years, and out of the 10 years they recorded, okay, not even most, out of the 10 years, 5 years they recorded a loss, and in the other 5 years they recorded a profit. But then it appears that the losses that they have incurred in the last 10 years is much more than the profit that came in. So now in 2014 we see that this is 2.05%, which is saying that for every naira that is made, there is a 2.05 kobo profit. That's what it's saying. So if for every 1 naira they are making 2.05 kobo profit in 2014. Now in 2015, this is indicating a loss. It's saying that for every 1 naira that's made, they had a loss of 1.9 kobo. So when they make every 1 naira, any 1 naira, they lose 1.9 kobo. Now in 2016, this must have been a very terrible year for the Northern Nigerian Flour Mill, because here we see that for every 1 naira they made in 2016, they lost 20 kobo. For every 1 naira they made, they lost 20 kobo. So this is what the profit margin is saying. Profit margin actually say that what percentage of the revenue is being kept as profit, what percentage of the revenue is being left as profit. So that's what it's saying, what percentage of revenue is left as profit. So this is saying that for every 1 naira they are losing 20 kobo. And then it continued, though it was a reduced loss in 2017, and this is saying that for every 1 naira they lost 1.36 kobo, and it continued until 2020. They regained, not really regained, but then at least they moved from the loss era, where for every 1 naira they made in revenue, they they kept 0.73 kobo as profit. So then fortunately it went up slightly in 2021, and there was a slight drop in 2022. In 2023 it came up a bit more in 2023 to 1.69. So 2023 is the closest since 2016, since 2015, where they, okay, no, not even 2016, 2015 they still recorded a loss here. So since 2014, the closest profit they've had in 10 years is 2023, because the highest profit they had in 10 years is 2.05. Now I'm talking in the context of profit margin right now. So in 2014, where for every 1 naira for every 1 naira in revenue, they made a 2.0005 profit. So the closest they've had to that in the last 10 years is in 2023, where for every 1 naira revenue they made 1.69 kobo in profit. So we can see here, so the chart may actually be confusing. So to give more clarity to it, we'll see this middle line. I think I should take a zoom in. Oh no, instead of that, okay, I think I should take a zoom in. So okay, just a moment. Okay, all right, so just to take a zoom in. Okay, now if we look at this, we'll see that there is a line here. We'll see the 0%. We'll see the 0% here. This is where the line divides the negative and the positive. So below the 0% line, you see the negative 5%, and above the 0% line, you see the positive 5%. So everything below this line is showing the negative. So we see that in 2016 it was negative 20%, and then above this line everything is, now the figure, don't get confused by the figures. The figures are showing negative, but they are still, the bars are below the line. So for all the bars below the line, it's indicating a negative input, and for all the bars above the line, it's indicating a positive input. So I just did that for clarity. So this line is demarcating the negative and the positive entries for this data. All right, so that is actually what the profit margin of this company looks like. It doesn't look so well. It shows that they have a lot of improvement to do, because they need to take these numbers up a bit more, and this can be curbed by observing their costs and pricings, and also observe their efficiencies and other measures that can be adopted to improve these metrics, as it says a whole lot about the financial health of this company. So that will be all for this video. Thank you so much for staying. I hope that you are already subscribed to this channel so that you do not miss out on any insightful video like this. All right then, until next time, thank you.